I don't know if my mic is, oh no, my mic is working absolutely fine. I'm sorry to tell you all that we will not be taking our shirts off at any point in this talk, but we could probably be convinced otherwise. Thank you all for staying here and being here in the first part, like getting to Dubai and what, appreciate that. My name is Lawrence. I have the fortune of being both the co-founder of the Wildcat Protocol and moderator of this panel. So what time is it now? It's 4:30. For the rest of the hour, I will be talking with the DeFi heavyweights to my left about basically what do we need to re-incentivize DeFi? Does DeFi need re-incentivizing at all, or are we doing absolutely fine as we are? So I would argue that it is. I will get straight into the swing of things. I think all of you will probably recognize the names of the protocols that these people are working on, but you might not know their faces. So I will jump in by starting with Jordi and then switching around. Do you want to just quickly talk about who you are and what you're working on? Just a minute or so.
Yeah, sure, sounds good. Good to see that we have a lot of exciting things going on, and maybe at the end we'll take our shirt off and start boxing as well. So I'm Jordi, I'm the chief alchemist at Mantle. Mantle is a layer 2 on Ethereum. So we've been building for about 9 months now. Very excited about the ecosystem and how that's going, and I'm sure we'll dig in.
Grant, should we go Eugene?
Sure. Hi, everyone. I'm Eugene. I work at Ellipsis Labs. We are core contributors to Phoenix, which is a limit order book DEX on Solana. These days, we do $300 to $500 million a day of spot volume, totally unincentivized. We're really big believers in active liquidity over passive liquidity, even on chain.
Nice. Julian?
Hi, my name is Julian. I'm the CEO and co-founder of Avo, previously known as Ribbon Finance in the last cycle. Yeah, we are sort of derivatives DEX built on Ethereum. We are sort of using like the OP stack, and we are also an Ethereum layer 2. And we initially started with focusing on crypto options, but we've also started doing perps in the last 6 months.
Grant. And last but not least, Tien.
Yeah, so I'm Tien, the CEO, co-founder of Pendle. So Pendle is a protocol for the tokenization and the trading of yield. One of the more prominent use cases that we've enabled recently is points trading. It's currently deployed on five different chains, including that on Mantle. Currently, we have a little more than 4.5 billion in TVL. Daily trading volume exceeds that of 200 billion.
Grand. I realize that we should probably push our mics up a little bit closer to our mouths, I think, or like shout. I don't know if like, can people in the back hear us all right? Well, I mean, I guess you can hear me because I'm shouting, but
yeah,
that's fine.
thumbs up over there.
Oh, grand, okay. So, look, I'll jump in like, thank you everyone. I have spent a large part of the last couple of weeks and months messing around with the meme coin meta, right? We've all been messing around with pump.fun. We've been having a great time either kind of on Solana or Ethereum. But that's not DeFi. That's not necessarily who I am. It's just, it's fun to engage with. And I think an accusation that gets tossed at us quite a bit is that DeFi doesn't necessarily have a point, right? I think there's a model of financial nihilism that's going around lately, that markets don't mean anything and it's all valueless. And so ultimately, like, are we building the tools that promote that? I guess, who and what do you guys think that DeFi in what we are coming into calling the 3rd or 4th cycle, who is it for? I guess, Julian, start with you.
Yeah, I think I have a bit more of like an accelerationist take on this. I think meme coins sort of force people to go on chain. I mean, these coins are literally like created on chain, the initial liquidity is on chain, and the whole value proposition of this meme coin game that people are playing is just like how early you are in these things. So by nature of the game that they're playing, you kind of have to be on chain to participate. And yeah. I think, you know, it may be extremely zero-sum in the short term, but I do think the longer, sort of longer-term effects is everyone now has a Phantom wallet, has a MetaMask wallet, and you know, maybe this creates a bit more adoption in sort of the crypto rails that we can use to do real things. So yeah, I mean, short term it's kind of nihilistic, but maybe long term it actually pushes adoption and lets us do like real finance.
Yeah. I mean, I hear a bunch of people say like, oh yeah, we'll just funnel people in once they've made it off their meme coins and they'll start using the infrastructure that we build. I'm not sure quite how valid that is, but I mean, like, I could see the appeal of it, right? Anyone else?
I mean, we've been seeing this for a while. I think
Yeah.
if you look at the volume on Upbit, for example, in Korea, they're not trading Bitcoin. Usually they're trading Bitcoin Cash ABC, which is basically a meme coin, right?
Yes.
And it sort of becomes less around what is the long-term investment and more like, is there something that can make me rich right away? And I talked to a lot of young people, buying crypto, and there's a part of the brain that just gets hit right away with the dopamine receptors. Maybe with meme coins, it's like a slot machine. It kind of has that like unexpected event, which is, let's just say, much more engaging than hold your Bitcoin and it'll go up 40% a year. Now, your question is very good. Like, does this mean like we're going to actually use this stuff and make them? I think so. Like, there's signs of it. Like on Mantle, we have Puff, which is a meme coin that is starting to maybe engage with the underlying ecosystem in ways that are stepping up and leveling up to something. And I think we'll see more and more examples of that. We saw Hyperliquid launch a meme coin called Per, but it seems to have a lot of tie-in into that ecosystem and be very important. So we'll see more of that.
Yeah, fair enough.
Yeah, I have a view here similar to that of Julian's. So I speak on behalf of our product, right?
Yep.
We build a tool. Initially, it's intended for interest rate swap.
Yep.
We started out in 2020, and we only got more meaningful traction in 2024 this year.
Yep.
Now, in the process of that 4 years, we have tried so hard to educate users about interest rate swap, rates trading, and the benefits of that would be, like for someone who wants to speculate on yield, there's a more capital efficient way to do so. And for someone who wants to just lock in the yield and an attractive, like say fixed APY, they can do that with Pendle as well. It was never successful.
Yep.
We had some traction last year, but when points season happened, we started to see a lot more traction. Now that is, I think, a good sign. I mean, of course, I don't know how long the points game can sustain.
Sure.
But that it really accelerated our educational efforts, because now I think a lot more people know the mechanics of YT and PT.
Yeah.
And I feel very encouraged when I see people just quoting PT and YT on Twitter so loosely. Now they don't have to say like, they don't have to provide a background or context. What is PT? In the past, we have to provide so much material. We have to help users understand like, strategy this, like what's the strategy behind it. Now we just have to outline a certain trade, and then people can reverse engineer the entire trade and figure things out themselves. And I think this is a very healthy growth. The use case wasn't quite expected.
Yep. It never is.
Yeah, sure.
It never is what you think it is.
But I think it's a step forward for the entire sector.
I guess DeFi as mechanism for financial education is a worthy goal, but it's not quite what I thought that I would be doing. I mean, like, the Pendle docs are amazing and, like, really, really well done. I mean, like, I guess I don't have, like, much insight into the Solana ecosystem, so I don't know how that feels kind of, like, more a lot of the on-the-ground stuff in terms of meme coinery is in your playfield.
Yeah, I mean, I'm not personally participating all that much in the meme coin mania, but it's undeniable that us as Phoenix as a spot exchange has benefited a ton just from the increase in volumes.
Yeah.
I mean, I agree that undoubtedly we bring a lot more people on chain. And if you look at the shape of the retail guys' returns, I don't think it's too different in this current cycle versus the previous ones, where maybe in the previous ones the majority of entrants are late entrants and they're buying BTC on Binance or Coinbase and then selling the bottom later. And then now that's just happening in the meme coin arena instead. So I think it's a little bit better for that to be happening on chain, where, as Julian said, people are creating wallets. They're learning to save their 12 magic words, or at least some of them are, right? And yeah, it's a zero-sum game. It's I think a very expensive bootstrapping mechanism. But at the end of the day, the market's going to do what the market's going to do. And we just have to make sure that, at least some folks are building for the long term. So it's not just, we play this zero-sum game. Some people got very wealthy. A lot of people, lost some money. And there's actually some value on the other side.
Yeah, fair enough. So, I mean, I've just talked about how, you are the one on the stage that's focusing on Solana, whereas the rest of us are on layer 2s that are doing EVM stuff. Back when DeFi first started, like the summer of 2020, we really just had mainnet. And we did have BSC a couple of months later, which is where, that was the canonical place to go and play around. We all work, we've got 2 optimistic rollups on stage. We've got Solana, I focus on mainnet, but I'm looking at moving Wildcat somewhere else as well, just for attention. Because this game is a liquidity one, and it's an attention one, and both of those beget each other. Is this a problem for DeFi? Are we just bound to be relying on bridges holding everything together for the rest of our careers? All fighting over 20, 30 million on each individual chain? Does it matter?
Yeah, I think, it is a good point. I think we are sort of beholden to the Ethereum's curse, where this is sort of the way that the sort of cards have fallen. And this is now the roadmap of Ethereum. And I think just the nature of all the money and liquidity being on mainnet, it's difficult for a builder to ignore it, I think. So for the more pragmatic side of people like us, I think we're sort of just going to where the users are, where the money is. And yeah, I think just the nature of how the Ethereum scaling roadmap has played out is sort of forced us to be on L2s as well. So I do agree that, this creates so much fragmentation. But the other alternative is sort of going down the Solana route. So I think both are acceptable approaches, and both will happen. You just can't sort of wind back time on the Ethereum roadmap.
Yeah. I guess this is a question specifically for Mantle as well. In terms of, obviously the goal is to bring in as much as you can and make it as active as you can and appealing. But is that a primary goal, or is it something that is being expected to happen kind of as a consequence of the DeFi work that's happening there?
I think both. It is very competitive. There's so many L2s, it's so easy to spin one up right now. 2 things. One, we'll get some consolidation. I think there will be, we see the OP superchain. There'll be a few more of those sort of continents that group up, and maybe you start having shared sequencers, the bridging, the wallets, the whole experience starts feeling very different, much smoother than it is now, which I agree, it's very fragmented. So that's going to get a lot better probably in a 12-month horizon. In the meantime, we see a lot of dead chains, right? That there's not much liquidity. There's people airdrop farming. That has been the meta of, there's been 2 metas, I guess. One was the airdrop farming. The other one is the stake for airdrops, which is, I guess, still the same thing, but you're staking to do it. So that's because people love tokens. I'm sure everybody loves just getting new tokens and then seeing what happens. Mantle specifically, we have a very large treasury. We're starting to deploy in strategic ways, and that's ultimately been the differentiating factor. And if you have this weapon of liquidity, it really gives you a head start when you want to build an ecosystem. And we're using it now, and happy to have Pendle and deploy more and more strategic treasury funds.
Nice.
Yeah, I'm more optimistic. I don't think I think it's that part of the cycle.
Sure.
Right? This time of the cycle, naturally there will be a lot of L2s, L1s, whatever it is. But I am also of the opinion that things will consolidate. And I'm also quite optimistic that things like chain abstraction can help improve the experience.
Sure. But last cycle we didn't have this kind of consolidation. I think the idea is that it branches off and then it collapses in on itself, whereas we've not seen that before. And does that not then suggest that perhaps we're doomed as DeFi people to rely on the infrastructure people to come and save us with cross-chain abstraction?
I think it's, you can't have one without the other, right?
Sure. I guess you don't want to be like the tail being chased by the dog. we're sitting there going, oh, we've got all these good ideas and we can bring all these things around as soon as X happens. They're like, well, who's doing X? We're like, well, they're over there. You should pay attention to them.
You can't be good at everything, right? Like very few chains, very few teams, even the ones that raise hundreds of millions of dollars to build a ZK thing or that, they're not good at the product side. They're good at, advanced cryptography. I'm very good maybe at the end user, understanding the user, but I don't understand the tech side. And I don't know how you feel about it, but when you're building an application, you have ingredients that you can work with, and if there's an ingredient that hasn't been built yet, like you look last cycle, there wasn't a lot of this chain, account abstraction, for example, better bridging, like a lot of the improvements on the wallet side on Solana, for example, on the Ethereum side, I think we're still trying to get there. There's no like amazing experience there yet. But these things that, as an application builder, you want to see great ingredients so you can make a good meal. And it will be fragmented. We will rely on underlying people to keep solving things while we're in the kitchen.
Yeah, that's fair.
Yeah, I think things have improved drastically in the last couple of years. So I remain optimistic that it will continue to be the case. And then we will probably come to a state where you can very easily deploy capital from, like, say, Base and have it implemented or deployed into a pool on Ethereum.
Yeah. I mean, I see Circle kind of aiming to do this kind of stuff itself, but they have the chops to do it. I hope we end up getting there, and I hope we end up getting there soon, because it would make life pretty easy for a bunch. So, beyond kind of like the needing kind of infra to flag up a little bit where we can help where we can, a lot of people say that, kind of we've now invented all of the things that DeFi can replicate properly, and they say there's this lack of innovation in DeFi. I really don't agree with this. But it's something that I hear quite a lot when I speak to people, whether, kind of it's institutional or if it's just people that are vaguely familiar or like did DeFi and quit. And they're like, well, there's nothing that's exciting for me. These are generally the same people who say that, oh, the last thing they got keen about was Squeeze. They were like, oh, we've done power perps on chain, hooray. So we're all working in DeFi, and obviously we like the things we're doing and we think they're important because otherwise we wouldn't be doing them. But I guess if it's either your own thing or something else, like what's the thing, the innovation, the occurrence in DeFi that's most exciting for you right now? Like why?
I mean, on stage, I think we have some of the few people that are maybe innovating in a sustainable way. We did have DeFi 2.0 life cycle, and I would say we're back to a new 2.0, because that 2.0, we're not really building on it. I think we're kind of scrapping most of it aside. I don't know how do you guys feel?
Yeah, I mean, I think there is some interesting stuff going on the protocol design side. It's just never going to be as loud as some of these other growth games that are going on.
Sure.
So if I'm some new layer 2 and we're doing some big token incentive to juice the TVL today, it's going to be a lot louder than folks who are innovating on the market microstructure who maybe will have to get loud at some point but aren't doing it today. And I think a lot of these, call them like circular Ponzi-esque games, like they do collapse at some point. I'm pretty optimistic that we're not going to have this massive fragmentation for a very long time. And at the end of the day, there's going to be a lot of differentiation based on the applications.
Yep.
And so if you end up with like 30 or 50 or 100 undifferentiated EVM L2s, they're always going to be competing on these sorts of growth hacks. And then if you have infrastructure that enables net new applications that people actually want to use more than just for an incentive farming, then those are going to be the guys who are going to win. And if none of those ever exist, then I think DeFi just doesn't really deserve to exist. If we can't create anything that's net new, net useful, it's only Ponzi's, then yeah, we're back at the sort of shitcoin nihilism or Ponzi nihilism case.
Yeah, fair enough.
I actually do kind of agree with your point about, I do think the low-hanging fruit in DeFi has definitely been picked over the last few years. And I mean, I'm quite excited about adoption. I think there's no use for us to build a lot of complex stuff if no one cares or no one uses it. So yeah, I mean, I do think this cycle everyone's trying new stuff on the adoption, like points, I guess. But I wouldn't really consider that innovation. But I think a lot of protocols now are actually trying to get tens of thousands, hundreds of thousands of users, where the last DeFi cycle, no one cared about how many users you had. the top protocols would have 10,000 users, and that's it. So yeah, I do think this cycle is the theme is more about like actual adoption, like real humans using these things instead of just like a bunch of us sitting in a room and passing our TV around to each other.
There's a reason we still joke about synthetics having 12 users in total, right?
Eight
And everyone got really excited about that at the time.
Starkware too.
8.
No, I quite look forward to the development of restaking. I think, yeah, just the eigenlayer pie, because there are a lot of protocols that are building on top of it,
Yep.
and then I think shared security makes sense to me, and of course, like AVSs. I think that there's a lot of room for AVSs to flourish.
Yep.
It might take a while for some of these infrastructure to be built out, and then maybe an even longer time for them to find the demand. But I think in general, it can make the asset that is staked more utilized, and it also make it can probably be a more secure way for a lot of these protocols to operate.
Yeah.
Streamlines the resources as well.
Whenever I think about this, I don't necessarily think of the restaking mechanism itself as DeFi. I mean, it naturally is, because you end up with a new asset that you end up moving around. But if you're thinking about shared security as a purpose, it almost feels like it's kind of wolf in sheep's clothing its way in. Like, we talk about things that we're excited about, and I really, like personally, I've always really wanted to be excited about like the RWA idea. You know, but this was kind of more in a real world asset, like, you know, we've seen the meme about like real estate coming on. We tokenized stuff with real T, etc. And now all it really means is we're just trying to shunt US T-bill yields on chain, which like kind of black-pilled me on this. Like, I would like to see a resurgence in being able to get real world assets on stuff, but we don't get to drive that. That's a regulatory thing. And for the last 5 years, we have always said, in 2-3 years' time, it'll be clearer, and we will be dead by the time we probably get to like a sunny uplit satellite lands. So, I mean, we have...
yeah, just to kind of make the case for DeFi, since we're here talking about DeFi. DeFi, you know that meme where the guy's like looking at the Earth in the spacesuit, and he's like, oh shit, this has always been?
Yeah.
All of crypto is DeFi. I mean, crypto,
Yeah.
what does it mean? It's just economies, digital economies, crypto-economic coins. Yes, we have NFTs, fungible, non-404s, all this different stuff. It's all DeFi, and all this other stuff, AI. If you look into AI, most of it doesn't make sense. Like crypto AI, the stuff that makes sense is around building economies.
A disrespecter on stage. He's just like me.
So building an economy for agents, building an economy for using decentralized physical infrastructure, stuff like that, that makes sense. That's DeFi.
Yep.
And you can do things like take fixed yield, move risk around between people who want the risk and don't want the risk, stuff like that. So ultimately, gaming, you look at gaming, people want to look at Web3 gaming. Most of the tokenomics for those games need to make sense in a DeFi world, and they need to have, marketplaces and these things. So it all ties in.
Yeah.
This is the backbone ultimately, and having good UX, focusing on the user, good wallet experience, like very clean docs. This is what I love about things like Pendle. It's intuitive, and it takes something that everybody can use and kind of understand what's happening. So, with Mantle, I've been trying to bring the same approach, trying to abstract a lot of the complexities and ultimately just get to the root cause. I mean, what do people want? They want a savings account for their money, some of it in stables. So, you try to design a very good yield-bearing asset for people to have. If you're in the Ethereum community, people want to hold ETH. How about building like how many of you have heard of meth? Anybody? I'm not talking about the the stuff that's going to get us in jail, but
how many people here have heard of METH, meth?
Okay,
hands up.
A few meth heads.
There are dozens of us.
I have someone in the back. A very excited meth guy in the back. So meth is Mantle ETH, and it's something that you take Ethereum and you try to build a community around it. You give yield to it. You try to make it engaging. You give it a brand. You create like a liquidity. It doesn't seem innovative in the base building block, but it is in a user perspective.
Yeah, that's fair.
Sorry to rant.
No, you kind of slid into where I was going to end, because we have 7 minutes left. So instead of doing anything deep about talking about regulation or institutions, let's end something where we get to pitch the bits we're on. I despise the term alpha, but I'm going to use it unironically. Any alpha in kind of what you're working on, future facing, or just thoughts about kind of where we're going kind of as a community writ large.
Sure, I mean, I can start. I mean, I think I just want to piggyback off what Jordy said. Like the history of DeFi is just like the financialization of everything. And I mean, stuff like points were supposed to be non-financialized, and they're getting completely financialized with like what Tien's building. Stuff like what we are building is like these pre-market things. Like everyone's just trading, speculating on like events now, which are like, which is sort of like an interesting place that the market has come to.
Is polymarket DeFi?
Yeah, I mean, it kind of is, right? Like what Jordy said, like all we're building is just like digital economy, and people are just trading stuff, and if they're not trading stuff, someone would build a tool for them to trade it.
Yeah.
So even everything from like the social side is getting financialized. So yeah, I do think like what we're building is kind of like the backbone. We benefit from all these different use cases because they do get financialized at the end. So yeah, that's a bit of my rant. I don't have any alpha.
Fair enough.
Buy meme coins.
Not buying your points.
Which one?
Yeah, I also don't have any alpha. I would say that the assets really matter, whether they're real-world assets as we imagine them today, or crypto-native assets that end up having some sort of real value, some tangible value. Because like the only reason finance is useful, the reason finance is positive sum, is because there's like these businesses or people who like naturally end up with risk. For example, like a farmer who's going to go plant corn, they're going to be exposed to this corn price for the next 6 months until they can harvest the crop. And so there are these financial instruments called futures where they can hedge out that price, they can hedge out that risk, because they're not traders, they don't understand those markets, certainly don't understand them as well as the most sophisticated market makers playing zero-sum games. And that is where the real value in finance comes from. So no matter how much we innovate on the primitives, you know, your shirt says banking but worse. You might even invent banking but a little bit better on chain.
Yep.
But it still doesn't matter unless there are real assets that people have real demand to transact in beyond just a speculative use case.
Yes. I mean, I've been working on a under-collateralized credit protocol. Credit is what powers the world economy.
Yep.
I'm trying to bring it on chain in a borrower-driven way so that you can kind of index on rates, just to kind of see what the demand is like there, because the presence of credit indicates your leverage and just kind of how superheated a market is. That doesn't necessarily feel like it fits into a DeFi model, and I'm using crypto rails for visibility, and I'm using ERC20 tokens to represent debt, but there's legal stuff underneath it, and it jars a little bit. I'm excited about this. We've seen credit like work either through CDFI or through DeFi platforms that have existed before. It's a different attempt at it. But I don't think I ever get to say to myself, like, people go, oh, so you work in DeFi? I'm like, I'm not sure. I don't know. I guess we can end.
I'll give you one thing that I'm pretty excited about, and I think we've seen seeds of this. I know we're not there yet, but I think that the social aspect for people will get a lot better with crypto. Ultimately, one of the signs of this is the NFT collections that have been getting airdropped to them. And this has been like a massive thing that's come up just this cycle. Pudgy Penguins and Mad Lads and all these different communities. In that sense, the NFT acts as like a reputation for your wallet. It's like, I am a part of this community, maybe I'm in the Discord, maybe I'm part of this thing. And that lets you get targeted. And as we talk about many times, it's been said too many times that attention is very valuable and it's very scarce. That's like in an AI world where there's so much content, real human attention is very scarce. And I'm really looking forward to the development of like on-chain identity for your wallet, whether it's an NFT. We have soul-bound NFTs now where you can't even transfer them. So they're kind of like a proof of attendance. Like you attended this conference, you attended, you got a certain NFT for doing an action on chain, it's stuck to the wallet. Now that wallet starts to gain value. And if that wallet's on your phone, it's part of your identity, and people learn how to custody it properly, we'll start seeing like stacking more social primitives on top of that.
I've been digging into quite a lot of the various KYC solutions lately, just mainly because when I'm dealing with credit, that's something that people need for their risk and due diligence. And it seems like now with the rise of ZK proofs, that we're now able to start getting some pretty meaningful information without kind of relaying data on chain. So you can do things like you can check if you are on a machine that also has an active Coinbase connection, because you could just ping TLS stuff and be like, am I actually signed in? And that allows you to make some inferences about stuff. And does that make people more comfortable about sharing stuff because they know who their counterparty is roughly? There's a keyring network which is working now that you can kind of hook in a bunch of KYC things. I feel like that all ends up, and you could do stuff like issue tokens that are soul-bound or whatever, like credentials that exist to a wallet. I guess this is all sort of the kind of same thing. NFTs feel more a native mechanism for that. Like, I would sooner, I think, if I was doing something more degenerate, airdrop to schizo posters than perhaps anyone that's like demonstrably worked on the KYC protocol. But I guess the joy is that it's all things for all people, right? Mm-hmm. We have 1 minute left, so I guess this is the part where we all take our shirts off and square off against each other, right? Otherwise, thank you again, Tien, Jordi, Eugene, Julian. Really, really appreciate the time here. Thank you all for sitting through it. I realize that we've got a captive audience here. I realize we only have about 2 hours left of the conference. I hope that for what little of it is that you enjoy it. And we will leave now. Thank you, everyone.
All right, thank you very much, you guys. Great job, Lawrence.